Hello, everyone, and welcome to another edition of the Smart Investor Podcast, your source for higher profits with less risk in any market condition. Okay, we have today where the Dow is surging above 23,000. The market is currently at 23,150 on the index. On the futures, we have it at 23,099. Now, this is prompting a lot of hysteria and headlines out there. Dow 23,000. I'm seeing a lot of bullish optimism out there on the street, and this is definitely a significant milestone for the markets. 23,000. Now, looking at the Dow is up 0.66%, 151 points as of this recording. The Nasdaq is only up 0.14%, which up 9.53 points, and the S&P 500 is only up 0.14% or 3.69 points. So what we are seeing is a situation where the Dow is definitely outperforming both the Nasdaq and the S&P 500 today, and we are seeing some divergence here in the markets, and it will be very interesting to see who catches who up. Will the Dow continue to lead, or is this just a overplayed move to the upside? And that is what we have to wait and see. Now, looking when we have surging markets like this and markets up to new highs, there's no real resistance on the charts here because this is a new high. So looking on the markets, we are just seeing the market move up and up and up. And if you want to get a video analysis of this podcast, you can go to smartinvestorcentral.com and go to market updates. You will see the video analysis where you can see the charts that I'm speaking about. Looking at S&P 500, the S&P 500 is at a new high also. So there's not much chart resistance here with the S&P 500. Market is definitely moving up and moving up nicely. We are in a situation where a euphoria is beginning to envelop the markets, and it's a time that we have to be cautious because using our market-led approach, we are going to follow what the market is saying, but that does not mean we're not going to be cautious to know that this market could turn around at any minute. Now, looking at overseas, looking at the FTSE, we see the FTSE was up 0.36% in the UK. The German DAX was up 0.37%. And the CAC 40 in France was up 0.42%. So it really looks like the Dow is leading the way. The Nikkei over in Japan was up 0.13%, and the Shanghai market was up 0.28%. So the Dow is definitely leading the way to the upside. Now, curiously enough, we have a situation where the US dollar index is really trying to bounce off from support. We had the US dollar index up today, but we see that it is retreating, and if we do get a close below 92.50, that could challenge the lows around that 91 level. So we are going to keep an eye on that. Could we have a situation with a stock market rallying and a US dollar rallying? Yes, it can happen. We just have to wait and see. The gold market today is down today, and we see a pullback in gold. I know a lot of gold bugs out there are really looking for a move to the upside in gold, and I am also looking for a long-term move to the upside in gold. But sometimes before these markets really get going, we can have these pullbacks, so there's nothing really to worry about. It does not change my view on gold. I believe gold will outperform most assets from here out. Looking at the gold market, we have support at the 1260 level and also 1240. and we have major support at 1200. So remember those 1260, 1240, and 1200 for gold. Looking at the crude oil market, we see that oil has actually really been positive over the last couple of days. The market is slightly to the upside as of this recording here, and it's breaking its longer term resistance near that 52, 51, 52 level. So oil is a commodity that we're going to keep an eye out on. Looking at the copper market, it's a commodity that has been really soaring. The market is pulling back slightly today, where the market were just above that 317 level in copper. But copper is a market to look out for, and a market that I actually do have positions on at this point in time, because I believe we're in the midst of a major uptrend in the copper market, and it just goes to show that it's good to diversify your portfolio holdings across different market sectors, because yes, the stock market is doing well now, but the stock market move is fairly extended. This is an extended market at this point in time. No, I don't advocate that you go short the market. Shorting the market at this point in time would be crazy. But what you have to do, the strategy in a situation like that, like this, is to keep your stop losses below the market. Just keep following the market up with your stop loss. Keep following the market up. And most investors, or all investors really, should have an exit point for their portfolio, because at some point this market will stop rallying. The musical chairs will stop. The party will stop. And the question you have to ask for yourself and your portfolio is having seen a run up in the market, are you going to book profits and take profits from this market, or are you going to watch the market drop all the way back down and you still hold the same stocks? Because that really is not a recipe for a profitable outlook and a profitable portfolio. Looking at some different stocks that let's take a look at Facebook, some wildly held stocks. We see Facebook price action in Facebook recently has been a bit anemic. The market holding between 165 and 175, but we have a new high yesterday, and it's followed by a new high again today near that 176 level. So Facebook is looking fairly strong. Market is currently a hold. I will rate Facebook a hold. Taking a look at Amazon, stock of Amazon, we see that the market is still above the $1,000 region. This is a stock that has done very well, but although we are seeing rallying markets today, we actually have Amazon still struggling to close above that $1,017 level, and for the momentum to the upside to continue, we need to see that market close above the 1,017 level. Taking a look at Netflix. Looking at Netflix, we see the market. The market was at new highs near that $200 level. It's pulling back this week, but this market is still fairly strong, and I would recommend a hold on Netflix. It's not a buy, it's not a sell. Currently, this is a hold. If Netflix was to ever drop below 175 down to 160, I would be looking to exit this market and book profits on Netflix. Okay, let's taking a look at a ETF that did fairly well earlier in the bull move, and it has been creeping up after we saw a 40% drop in the ETF, where the market moved from 400 to 240, and we are seeing it gradually creep back up from that 240 level. And that's IBB, the biotechnology sector. If you are currently in this sector, I would say that you should hold on to this, and just watch it and ride it up. If it closes anywhere below the $300 level, I'll be looking to exit the market. So, so essentially, what we have with the markets is a broad based gains. And looking at the VIX today, we see a VIX. It's not at historical lows. VIX is at 10.03. The lowest this year we saw was in July, where it was at 9 or 8.84. It's currently at 10.03. So it's not, even though the markets are making new highs, the volatility index is not making new lows, and we're seeing some divergence there. But to summarize what my feelings are, just be very careful. It does not warrant you selling this market now, but make sure you have your exit plan in case this market quickly turns around, because we saw in 2008, and we have seen history repeats itself. We see many times where investors get overconfident with a rally and think the market will go up and up and up forever, and the market turns around and they end up losing money. So don't let that happen to you. You're listening to the Smart Investor Podcast. Our goal here is to make you a much smarter and informed investor by looking at price analysis of the markets and not listening to the mainstream pundits out there whose records have been very shoddy at best. Just follow what the market is telling you. That, I believe, is the best way to sustain portfolio growth. Thank you very much for listening. If you want my free report on the market-led approach on how we look at the markets, you can go to smartinvestorcentral.com. There are 5 key elements that you need to understand with a market-led approach. And if you go to the website and download that free report, I will give you the 5 key elements in great detail that you need to look out for. So smartinvestorcentral.com and download the report. It's free. Thank you very much for listening, and I hope you have a wonderful day.